DeepSeek rolled out its R1 model barely a week ago, and it is now the top-rated free AI app on Apple's App Store, overtaking ChatGPT in downloads. The Chinese company claims to use fewer chips than rivals, making production much cheaper. Some reports say DeepSeek is 90% cheaper than OpenAI and works twice as fast. It has triggered questions about the billions being spent by tech giants. The new chatbot star is apparently having to deal with the perils of surging popularity. It has curbed new registrations, citing a large-scale cyber attack on its services. For more, Kyle Rodda, he's a senior financial market analyst from Capital.com, and he joins us live from Melbourne. Kyle, thanks for making the time to speak with us. Firstly, help us understand what makes DeepSeek AI so much better than the rest. Why is it a game changer?
Well, from the perspective of financial markets, it's a question simply of economics. And that is to say that if we can take on face value what the company has told us as true, and there's obviously questions around the veracity of the information and also maybe perhaps some of the more technical elements of the product, it's been able to achieve effectively a similar outcome or output that the big US AI giants have spent billions of dollars on and several years working on in the space of a couple of months and for a very small fraction of the cost, and will therefore be able to effectively sell its product at a much cheaper price. So the concern effectively is that this disrupts the AI business model in the United States, creates significant competition to sort of US tech preeminence and dominance, and potentially disrupts the industry more broadly speaking in terms of, the broader AI investment thesis. And that sort of rolls into, of course, too, as you were noting off the top there, trade relations and strategic competition between the US and China. So for the markets, this could basically be a cheaper and better alternative that could really undermine some of the tech valuations that we've seen skyrocket over the last couple of years.
Do you see DeepSeek's popularity as a long-term or just a short-term trend, not just for companies like NVIDIA, but other rivals as well?
It's very early to say at the moment, and as the markets and consumers become a little bit more acquainted with the product, they're already seeing some limitations, whether that be from obviously already outages, dealing with the increased demand for the products and increased usage. There are obviously some doubts about censorship and what that potentially means. And there's, again, like I said before, questions about whether there is true veracity, if you want to call it that, behind some of the numbers that the company has delivered to describe its success. If, for example, it is proven to be true that everything the company is telling us is factual, then yes, this could be incredibly significant, ranging all the way from the tech companies who are selling and building these large language models to companies like NVIDIA, who are obviously selling the chips and have benefited significantly from the demand for their chips. Alternatively, if we see that, maybe it's not all what it's cracked up to be, and maybe it's not quite as competitive, maybe the disruption in the AI space and for the AI developers won't be quite as significant. Alternatively as well, it could also be very beneficial for NVIDIA because all of a sudden we're seeing, the barriers for entry are being lowered because of a lower price for these models, which could, effectively boost demand for chips as, more or less that sort of supply creates its own demand. So it's a very fluid situation at the moment. It could be everything and incredibly significant, or it could be nothing at all. It's still very much in the moment of, time will tell.
The U.S. has been trying to choke off China's access to cutting-edge AI chips, but DeepSeek claims it's still managed to develop tech that rivals ChatGPT and its competitors at a fraction of the cost. What has it done better exactly?
Well, what it's effectively been able to do is it's used one of NVIDIA's older chips, or at least one of its modified chips that were briefly not being caught by sanctions. In fact, NVIDIA manufactured the chip specifically for the China market in response to sanctions. And it's also been able to do so in a way and in a particular language that means that it's able to be far more productive and efficient in terms of the chips that it uses and effectively the inputs required to be able to achieve the same outcomes as bots like ChatGPT ChatGPT and OpenAI's products, as well as Meta's products like Llama, for example. So that's why it's being treated as a potential game changer. The, again, question is whether we can sort of trust the information being provided by the company, whether there is, as Elon Musk has suggested and other players in Silicon Valley, that they've actually been using far greater numbers of chips and some of those higher quality chips and just are not disclosing it, or perhaps are hiding some of the costs. Those things market participants are still trying to work out and to get a better assessment of whether this is as impactful as initially it would seem to be. Again, a lot is up in the air at the moment. It doesn't even necessarily speak to the sort of competitive advantages of the product, which at the moment seems significant. But for now, the markets are kind of taking this approach of shoot first, sell stocks, NVIDIA in particular, ask questions later as we gather all of this information.
While DeepSeek's claims are still being verified, how could the app's emergence change the way the U.S. approaches AI?
Well, most of this is from a strategic point of view. First, then I think this is the two elements that really have to be fleshed out as to why the markets have responded this way and behaved in this kind of, again, shoot first, ask questions later dynamic. One is it really revises that kind of AI thesis potentially, which is one of the reasons why we've seen the incredible run up in Magnificent Seven stocks and this incredible outperformance in US equities and in very expensive valuations. Potentially undermines those materially. That's just simply a matter of another better, cheaper product coming into the market and rendering a lot of the massive capital expenditure plowed into some of these products largely wasteful, or at least showing a level of excess capacity that reduces the return on investment from some of these tech companies. The other element is this geostrategic or China-US competition in the tech space, and that kind of arms race in artificial intelligence to be the dominant player in the global economy and in global markets. And as we've already seen, this has obviously attracted the ire of the Trump administration. It runs the risk of more aggressive trade sanctions and maybe other forms of trade barriers on China, and a more sort of tit-for-tat dynamic emerging between the US and China in trade and broader relations, as clearly that kind of gap between the US and China potentially closes. So that's the kind of implications from a markets, investment and economic point of view for the AI and tech space, but then also the implications from a political or geopolitical perspective that is sort of causing this volatility in markets in the last 24 hours.
Thank you, Kyle, for sharing your insights with us. We were speaking to Kyle Rodda from Capital.com.